first socio-economic and caste census of independent India lays bare the stark reality across rural India. Over 74% of households earn less than 5,000 rupees a month. 40% of land is not irrigated, only 2% own cars and 11% own refrigerators. Shocking data on literacy. Nearly 36% of people in rural India are not educated and only just over 3% are graduates and just 5% complete higher secondary school. Relief for Kotak Mahindra Bank. The Foreign Investment Promotion Board hikes the foreign investment limit in the bank to 55%. Crucial Sunday beckons global markets as Greece votes on a proposal by its creditors. Prime Minister Tsipras calls on his people to say no to ultimatums, blackmail and fear. Two independent polls predict a cliffhanger. Steady session on Dalal Street as the markets go into the Greek vote with a positive bias. The Sensex reclaims 28,000 and the Nifty nears 8,500. The government steps up its disinvestment drive, invites bids for legal advisors to sell stake in Engineers India, Oil India, Ntpc, Bharat Electricals and Hindustan Copper. Competition watchdog amends the filing norms for mergers and acquisitions, hopes new rules will avoid undue delays and bring in more transparency. M&M's defence dreams get wings, extends its relationship with Airbus to manufacture helicopters in India for the armed forces. On the hour, stalled infrastructure projects see a sharp decline in the first quarter of the fiscal, but companies are still reluctant to make investments. A special report coming up. Buckle up, we take you on a test drive in the all-new Maruti Cross, the company's new premium bet. And on Tech Toys, we review the new Lenovo K3 Note and Microsoft Lumia 640 XL. Are they worth your money? Stay tuned to find out.
If the yes vote wins, the banks will open with a deal, which will not be viable. But if that is the decision of the Greek people, either from fear or from pressure or choice, we will respect it. If the no vote wins, and the no is stronger, I assure you the very next day I will be in Brussels and a deal will be signed.
Well, it is all about Greece this weekend. The world's oldest democracy has global markets on tenterhooks as it votes on the proposal made by its creditors to extend the bailout program. Good evening. Thanks very much for joining us on India Business Hour. Let's kick things off from Athens. The clock is ticking in Greece for Sunday's referendum. However, there is still an outside chance that it will not even go ahead. Greece's top administrative court is due to rule on whether the referendum breaches the country's constitution. Now, human rights group, the Council of Europe, has already expressed unhappiness with the vote, and that's partly due to the speed of the process and also the question that's being asked. Now, if the vote goes on, it promises to be a cliffhanger with two independent polls predicting a dead heat. The Greek finance minister and the prime minister are urging Greeks to vote no. They believe that voting no would ensure a deal as early as Monday, but the Eurogroup president has rubbished those claims, saying that creditors have made no offer to Greece. He went on to paint a bleak picture, saying, and I quote, "The future of Greece will be difficult regardless of the outcome of the vote on Sunday." Julia Chatterley, who's been getting us all the updates from Athens, joins us now. Julia, what is the mood in Greece? And take us through what the opinion polls are suggesting, because both seem to suggest a cliffhanger.
Less than 48 hours now to go until Greece's yes-no referendum that many outside of Greece believe will determine Greece's place in the Eurozone going forward. The morning papers here, I think, tell the story very cleanly at the moment. This is a depiction of the latest poll readings. You've got the yes vote sitting at 44.8%, the no vote sitting at 43.4%, so just over a percentage point between them. Yet you can see a euro sign here. This is just a straight question. For those that want to remain in the euro, 74% at record highs, in fact, for those that want to remain in the eurozone. 15% of those people that want to go back to the drachma. We keep asking these questions. Do people understand that a no vote in this referendum on Sunday actually means something more than just a no to austerity? Does it mean a no to Greece's place in the eurozone going forward? A further paper here, a centrist political party paper this morning saying chaos, poverty and the drachma. People are afraid to vote no. This, of course, the implication of what we've seen from capital controls in the lead into this referendum throughout the last week, the bank closures, people being restricted from taking money out of cash points. We've been talking about this all week. What is the shy vote here, though? Are people going to be more afraid to tell when they talk to pollsters if they're going to vote yes? Or are they more afraid of telling people that they're going to vote no? I'd probably argue that the shy vote here is yes. Outside of Greece, people ultimately believe the yes vote's going to win, but the views here in Greece is that it's going to be a very close-run thing, and it could be very tight on Sunday. Beyond Sunday's result, what next? Analysts are suggesting that it's going to be chaos either way, political trouble if the yes vote wins. What happens if the no vote wins? Will the creditors be willing to bail Greece out and provide further support and money in the future? Who knows? But at this stage, we're counting down to a crucial referendum on Greece's future and on austerity ultimately in this country.
And Julia, we will be coming right back to you on Sunday through Sunday night here in India, and of course as Greece heads to the referendum. Appreciate you joining us with that heads up. So what exactly is the question that Greeks will be answering on Sunday? It's pretty confusingly worded, to say the least. Here's the English translation, and I quote, should the plan of agreement be accepted, which was submitted by the European Commission, the ECB, the IMF, in the Eurogroup of 25/06/2015, and comprises of two parts which constitute their unified proposal. The first document, entitled Reforms for the Completion of the Current Programme and Beyond, and the second titled Preliminary Debt Sustainability Analysis. Not accepted or no, accepted or yes. Now, to put all of that simply, the question Greeks will be answering is whether they should accept the fresh austerity measures imposed by the creditor to secure a third tranche of the bailout. So that's the question, but don't forget to tune into CNBC TV 18 on Sunday for the latest from Greece. We will be live starting 9 p.m. India time through about 2:33 in the morning. That is when we are expected to hear on the referendum from Greece. Now, the European markets have ended with losses ahead of the vote in Greece. Let's in fact pull up the frontline indices for you. Nervous ahead of that crucial referendum. All the major indices closed in the red, down by about 0.5% or so. So that's the FTSE, the CAC and the DAX. Of course, the US markets are shut today ahead of the 4th of July weekend in the US. But back home, it was a steady session on Dalal Street as investors braced themselves for the Greek referendum. But I have to say that we've been very, very resilient. The Sensex actually gained another 140 points today, reclaiming the 28,000 mark. The Nifty added over 40 points as it gets closer to the 8,500 level. Now, after outperforming the blue chips for the last few days, today the mid-caps ran out of steam. But for the week, and look at this, major indices have actually gained about 1%, and that's not bad at all, given the fact that we've been dealing with some global uncertainty. So while we've done okay, Greece and Europe are dealing with referendum. The Chinese markets have their own problems to deal with. The Shanghai index today lost as much as 7% in intraday trade, ending the week on yet another very weak note. Sri Jagaraja joins us now from Singapore with a complete wrap of the day's trading action across Asia. What's going on in China, Sri?
Asian markets broadly pricing in a yes vote on Sunday's Greek bailout referendum, the next closely watched risk event for global investors. Japanese shares, they gained after a central bank survey showed big businesses intended to increase capital spending at their fastest pace in a decade. But China stocks tumbled again, surrendering much of Tuesday's sharp gains as investors took advantage of any rebound to reduce their leveraged positions. Latest factory activity data by private forecasters showed manufacturers cut headcounts at the sharpest pace since early 2009. Malaysia's benchmark marked its best gain in over 2 years after Fitch upgraded its credit rating outlook despite an $11.4 billion debt scandal at state investor 1MDB. That is your Asia Market Minute.
Sri Jagaraju, appreciate you joining us. And that red on the screen, of course, there, China, and that continues to worry global equity markets as well. Now, the government today released the first provisional socio-economic and caste census data of independent India. The survey provides a sneak peek into affluence, assets, and the caste composition of rural India. The data lays bare the stark reality of India that exists beyond its cities. This will be used by both state and central governments to efficiently target subsidies and social development schemes. Here are the highlights of the census.
41.64% or 36.8 crore Indians living in India's villages have never been married. This is just one of the many interesting insights from the social, economic and caste census data which was released by the finance minister. The government has said this data will be used to decide its approach to social security schemes and policy in general.
I'm sure with the enormity of schemes and their reaches that all governments have, this document will form a basis of helping us to target groups for support in terms of policy planning.
The census shows that 3/4 of India's population lives in 17.91 crore village households. Of these, 18.5% households are from scheduled castes and 11% belong to scheduled tribes. The data also shows that 56% of rural Indian families do not own any land. In fact, more than half of India's rural population sustains itself on manual labor, while 30% is engaged in cultivation. Clearly, these facts will be used by opposition parties as well as NDA allies and right-wing farmer organizations to oppose changes to the Land Acquisition and Rehabilitation Bill. Go deeper into the fine print and you will see that 40% of rural India is not irrigated. Only 37% of rural land holdings have assured irrigation facilities for 2 crops. The recently announced Pradhan Mantri Krishi Sinchai Yojana worth 50,000 crore rupees seeks to address this anomaly. But data shows that more intervention will be needed from the Modi Sarkar to deal with the farm sector. 3.6% of rural households have access to the Kisan credit card and only 4.12% households have access to mechanized agri-tools. Moreover, only 9.8% of rural houses could afford irrigation equipment. The highest earning member in 3/4 of rural houses make less than 5,000 rupees a month and only 4% households have someone engaged in the private sector. The survey also throws light into the asset ownership traits which could be used by India Inc. to their benefit. As much as 68% of rural folk in the Indian hinterland owns mobiles, 17.43% of villagers have two-wheelers, but only 2.46% own four-wheelers. In addition, 11% of village households use refrigerators. When it comes to dwellings, 44.5% of rural families live in kacha houses. On the education front, 35.73% Indians cannot read or write, but amongst those who can, only 3.45% are graduates. 5.41% have cleared higher secondary and 14% couldn't make it beyond primary classes. It now remains to be seen how this multidimensional data on rural India can be used to fine-tune policies and prioritize targeting of the government's flagship schemes. In New Delhi, with Rituparna Bhuyan, this is Shireen Bhan.
Well, that's the new data there. And joining us now to talk about this and the government's efforts to utilize this data when it comes to policy prescription is Abhijit Sen, professor at the Jawaharlal Nehru University. Mr. Sen, appreciate you joining us here on CNBC TV 18. I was having a conversation a short while ago with the former Planning Commission member, Soumitra Chaudhary, and he said this data is important for 2 reasons. One, it's actually going to give the government credible data for the very first time. He called it Pakka data. And the second, he said this would actually help the government try and de-link policy prescription from this poverty line debate, which eventually comes down to name calling. Would you say that those are 2 significant highlights as far as the importance of this data is concerned as well?
Yes, I would. In a guarded manner, yes, I would.
What, to your mind, sir, is the key highlight or the key headline as far as what the data shows up? I mean, we've been reeling off from a preliminary assessment of these numbers, the grim reality of what really is going on as far as rural India is concerned. But what would your key takeaway be?
See, the SECC, by and large, agrees with the census on most things. The difference between the census and the SECC is, number one, that the census data is anonymous. this data actually goes down to the household level and you can identify households. The second difference with the census is that this has a few more questions which go into any description of multi-level deprivations. Let me also add that the SECC is much better in terms of accuracy in the rural areas than in urban areas. Urban areas are far more difficult to collect any data on, especially regarding deprivations. The third thing, let me say, which is common to the census and the SECC, is there is nothing here on the parameters by which poverty in India has been judged hitherto. Poverty in India has been judged hitherto on the basis of monthly per capita consumption. The SECC simply did not collect data on that. But it is very good data for rural areas.
Right, you're saying it's very good data for rural India, and thank you very much for articulating for us how it differs from the census data. But let's talk about policy prescription, because the finance minister, while he was releasing the data this morning, said that the government will utilize this in its approach to its flagship schemes, for instance, the NREGS. What should the government's approach be by way of utilizing this data insightfully?
I'm surprised you mentioned NREGS, because the NREGS is universal. So you cannot target the NREGS with any data. On the other hand, the whole purpose of this was, in fact, to target, and target in a way which is more finer than the usual BPL, APL division. The idea was that you've got enough parameters here so that you can choose your targeting to your scheme. For example, if you have something on health, or look at disability. If you have something on housing, look at housing. And I think it's unfortunate that you mentioned NREGA, because that's a legal
absolutely, along with the food security. Absolutely, along with the food security right, that is a legal entitlement. But if I could ask you specifically as far as the state of the agriculture sector is concerned, and what more we could perhaps expect from the government, because if I were to take a look at the irrigation numbers, and we did have this data previously as well, but 40% of rural land is not irrigated, 30% of the rural land holdings have assured irrigation facilities for 2 crops. We've just seen the government announce the irrigation, the Pradhan Mantri Gram Sinchai Yojana worth 50,000 crore rupees. Do you believe that that is going to be enough, and what could we perhaps take away from what the data is showing up as far as the farm sector's state is concerned?
See, let me be honest. I mean, this is the data which I had looked at, not the final version. I had in fact also put a report on how it should be interpreted. And the fact is that the data on land is poorer than other data. As
Why
far
would you
as
say
irrigation goes, simply because people lie about their land holdings much more than they lie about anything else. And anything related to land has to do with what you want to report and what you don't want to report. A question which I would say is that as far as irrigation goes, that 40% figure matches with reality. All other figures show that sort of a thing. About 2 crops, yes, also not too far away, a bit on the lower side. But this was not a census to look into agriculture. And so I think, if you try to read too much on agriculture in this census, you are looking at the wrong data.
So what should we be reading into, sir, as far as this data is concerned? Because you said that, you've been involved with looking at the data. What, to your mind, is the right approach at assessing or looking at this data?
See, look here. I mean, so far, we've been trying to target on the basis of two very separate numbers. A poverty estimate derived from consumption data, and then some ranking of households to get to a number which is the same as the poverty thing, but on some different criteria. Because the poverty data comes from a survey, and the ranking used to come from a BPL survey, a BPL census. Here we've got something which is comprehensive enough so that you can attribute your criteria. Don't call it poverty.
Right.
Because poverty is something which is a concept which has to be defined. Just take your scheme, say these are the guys we think deserve this scheme, and we've got the data to deliver it to the guys you define. So, there's a definition you can give on the basis of whatever has been collected, and you've got the data to go down to the household level.
Well, you're saying exactly what Dr. Soumitra Chaudhary also spoke to us about, and perhaps that is the most important sort of insight that we can take away from the conversations that we've been having on what to make of this census data. Dr. Ten, appreciate you joining us here on India Business Hour with your quick take on the implications of this data and what it could mean as far as the government social security schemes are concerned. Let's move on now to the other big story that we've been tracking for a while here on CNBC TV 18. The FIPB has finally approved Kotak Mahindra Bank's proposal to hike the FI limit from 49 to 55%. And while it's great news for Kotak Mahindra Bank, the Department of Financial Services is also working on a new definition of ownership and control. Sapna, who's been tracking that story, joins us now with the details. Sapna, why did it take the FIPB 4 meetings to clear this proposal?
Well, the FIPB clearance for the Kotak Mahindra proposal has come after a lot of delay, simply because FIPB was awaiting for formal comments from the Department of Financial Services regarding how the downstream investment in the insurance venture of Kotak Mahindra will be treated once the FI shareholding in the promoter, which is Kotak Mahindra, goes up to 55%, because the insurance FDI cap stands at 49%. Well, the view of the DFS is that indirect foreign investment, which is not used for calculation of equity capital, will also not be utilized in the calculation of ownership, which means that the existing rule of the insurance rules, which are notified on 19th February, which says that at least 50% of the promoter ownership or ownership should be in Indian hands. Basically, the insurance company should be completely Indian owned and Indian managed, and there should be at least 50% of that equity. So this, to that extent, will stand relaxed. And the caveat here will be that any indirect foreign investment, which would mean FI investment in the promoter company or even FI investment otherwise into the joint venture, that will not be counted as part of the equity capital, and neither it will qualify for the ownership rules. So this is a huge relaxation. In fact, what we understand is that these rules have already been changed, they have already been modified, but the formal notification is not out so far. Very quickly, also the earlier FDI definition had kind of exempted for FII holding in the promoter companies. So whenever they invest in the downstream ventures, the FDI cap is not really affected, so to speak. So that definition will also continue.
All right, Sapna, I appreciate you joining us. We are awaiting that final notification, and of course good news there for Kotak Mahindra, but I suspect this is going to impact the entire gamut, or that entire universe that was waiting for clarification on this front. In fact, the Finance Secretary Rajiv Mehroshi had told me this, that the government was going to come out with a clarification on the definitions of ownership and control when I caught up with him in San Francisco on the 22nd of June. Listen in.
We would very soon issue regulations which will clarify what ownership and control means. And the way that we are trying them, I think the investors will be very satisfied.
By when can we expect this, sir? And are these likely to be much more liberal than the current understanding and current norms?
No, current understanding is, I think, an extreme understanding. It is never intended that way.
Well, that's the Finance Secretary there on the clarification that is expected and now we understand has been put out, but the notification is still awaited on ownership and control guidelines. Now, the government is moving fast on its disinvestment drive. We learned the Disinvestment Department has invited bids from legal firms to appoint legal advisors for 4 offer for sales for 4 companies, a power major Ntpc, upstream company Oil India, Bharat Electronics Limited, Hindustan Copper Limited. These stake sales are expected to go a long way in helping the government achieve its ambitious target of garnering close to 70,000 crore rupees in the present fiscal. Now, as expected, the Competition Commission has finalized amendments to its merger control regulations. These are the 4th set of amendments in 4 years, but they come with a twist, and Menka is here to explain why. Menka, you told us last week that these changes were coming, and take us through what has happened and what are the surprises, if any.
Well, Shireen, the Competition Commission of India had in March put out a discussion paper suggesting amendments to these merger control regulations. These proposed amendments had drawn mixed reactions from across industry. Earlier this week on Monday, we spoke with CCI Chairman Ashok Chawla, who confirmed that several of the proposals in the discussion paper were to be finalized as amendments. And it now seems today the government has put out a release saying that those amendments have been finalized. The final regulations are not up as yet, but there are some elements in this government release that are in fact surprising. For instance, and let me explain to you, Tesco, when it was doing its deal with Trent Hypermarkets, was penalized by CCI because it did not notify the CCI at the time of seeking FIPB approval, so CCI penalized it for late filing. There was some confusion on how that provision is drafted in the regulations themselves. So in the proposed amendments, CCI had said that they would not consider an application to a government agency as a filing trigger. They would only consider either a deal document or a public announcement under SEBI's takeover regulations as a filing trigger. And that was what industry was happy with. This release from the government seems to indicate that the CCI has gone back to its previous position. The release says the scope of the term other document has now been limited to a communication conveying the intention to make an acquisition to a statutory authority. So that's the first surprise that's come in this government release from today. The second surprise is regarding a provision that was nowhere mentioned in the discussion paper. It finds place in the government release today for the first time. It says to bring in greater transparency regarding the review process. The amendments provide that a summary of every combination under review will be published on the website of CCI. Now, the few lawyers that I was speaking to this evening are concerned with what this will mean for deal confidentiality, but we're all holding our reactions back as yet, and we're hoping that the regulations don't necessarily reflect the changes as put out in the government release. If they do, it will be a matter of concern. If they don't, then this will be all about nothing.
All right. Well, we'll just wait to find out. Menka, appreciate you joining us with those details. Let's move on from M&A now to Mahindra & Mahindra. The $17 billion Mahindra Group, which is one of the oldest defense equipment manufacturers in the country, has just upped the ante. It's extended its relationship with the Airbus Group and hopes to soon begin manufacturing helicopters in India for the armed forces. Ajit Mangat and Arvind Sukumar get you that story.
Mahindra Defences, a subsidiary of the Mahindra Group, wants to become the first private Indian helicopter manufacturer under the Make in India initiative. To this end, it has expanded its relationship with its oldest partner, French aircraft maker Airbus. Airbus Helicopters will join hands with Mahindra Defence to set up a joint venture over the next few months. This JV will bid for tenders floated by the government for the manufacture of helicopters for the Indian military. This is not Mahindra Defence's first rodeo in the field of defence. Through various subsidiaries, it already caters to the needs of all three branches of the Indian Armed Forces, the Army, the Air Force and the Navy. This Bangalore facility of Mahindra Aerospace, for instance, is already engaged in the manufacture of aerostructure products, for which it has an existing partner in Airbus. The new JV, however, will look to leverage the capabilities to design, develop and manufacture sophisticated defence and aerospace products the Mahindra Group has developed over the last 68 years.
We have created, under one roof, 250,000 square foot of assembly space in Bangalore, besides our other 7 or 8 units which specialize on other focus areas. And we have already participated and expressed interest for both Army helicopters as well as naval helicopters. And goes without saying, we will also be providing pilot training on simulators for any helicopters which are inducted in the country.
This expertise and capability has already given the group the confidence to express an interest in manufacturing helicopters for Indian Army and Navy's programs to phase out and replace the existing squadron of Cheetah and Chetak helicopters. The new Mahindra Airbus joint venture, which will be mostly a 5149 JV, will also look at bidding for tenders to manufacture reconnaissance and surveillance helicopters, naval utility helicopters and naval multi-role helicopters. What remains to be seen is whether the recently modified FDI regime, which allows greater foreign direct investment in cases where high-end technology is involved, will be used to permit Airbus to increase its stake in the JV beyond the normally permitted 49%. In Mumbai with Sajid Mangat, Arvind Sukumar.